markets are closed, but the business stories are just heating up. Hello, I'm Mai Rodriguez. Catch up with us on Business Brief. The commander-in-chief of Iran's army vows a strong response to the U.S. bombing of Iran's nuclear facilities over the weekend. In a video message aired by Iranian media, Major General Amir Hatami said they are ready to fight, adding that they have faced America many times. Meanwhile, more than a dozen Israeli Air Force jets struck western Iran overnight, targeting airports and missile launch sites. The Israeli military also claims it attacked 6 Iranian airports across the country, destroying 15 fighter jets and helicopters. Asian shares mostly declined after the U.S. strikes on 3 of Iran's nuclear sites. This comes as the world awaits Iran's response. President Donald Trump previously stated that the strikes had completely obliterated Iran's main nuclear enrichment facilities, an operation he described as a spectacular military success. Trump, who once vowed to avoid what he called another forever war in the Middle East, now warns of more attacks to come if Tehran does not seek peace.
I think the stock market, there'll be 2 things to happen. I mean, they would have already, absorbed the surprise of the US attacks, the no casualties. They went over and basically took out the nuclear facilities. But in some ways, there may be relief now that we know that Iran doesn't have nuclear weapons, which was always something ticking over with financial markets and the world in general. So in some ways, there would have been shock hitting the markets, but then there'd be relief that the Iranian regime no longer has nuclear weapons. The question now is, now there's no nuclear strike weapons in the hands of the Iranian regimes. To what extent will the Iran regime last? They've had a lot of economic difficulties in Iran.
Japan's Nikkei 225, South Korea's Kospi, Singapore's Straits Times and Australia's ASX 200 are currently in the red, while Hong Kong's Hang Seng and China's Shanghai Composite are in positive territory. In the currency markets, the US dollar strengthens against the Japanese yen, Singapore dollar, South Korean won and Thai baht, but remains flat against the Hong Kong dollar. Meanwhile, the Australian dollar weakens against the US dollar. In commodities and crypto, gold prices slipped by 0.6%. Meanwhile, oil markets saw gains across the board, with West Texas Intermediate crude and Brent crude rising more than 1% and Dubai crude gaining 0.51%. In the cryptocurrency space, both Bitcoin and Ethereum surged nearly 3%. The international community gives mixed reactions to America's attacks in Iran's nuclear facilities. British Prime Minister Keir Starmer calls for a de-escalation and urges Iran to return to the negotiating table.
I've been speaking with international leaders this morning to that end, so I want to reassure the British public that we're doing everything we can to stabilise the situation, to de-escalate the situation, and to get to a negotiated outcome. But I'm very clear in my own mind that Iran cannot be allowed to have a nuclear weapon. That is the greatest threat to stability in the region.
Australia's Prime Minister Anthony Albanese, meanwhile, supports Trump's decision to attack Iran, citing continued uranium enrichment, but he also calls for a return to diplomacy.
We've been upfront about the challenge facing the international community, that is, dealing with the threat posed by any Iranian nuclear weapons program and dealing with the risk of regional escalation. And that's why Australia called upon Iran to come to the table and abandon any nuclear weapons program. Iran didn't come to the table just as it has repeatedly failed to comply with its international obligations. We urge Iran not to take any further action that could destabilise the region.
In Japan, an official expressed concern over Iran's threat to attack U.S. interests. Chief Cabinet Secretary Yoshimasa Hayashi calls for a resumption of dialogue. Russia's foreign ministry strongly condemned the U.S. attacks on Iran, calling them a blatant violation of international law and the UN Charter. Oil prices jumped on Monday to their highest since January. Brent crude futures was up $1.92 to $78.93 per barrel. U.S. West Texas Intermediate crude advanced $1.89 to $75.73 per barrel. The rise in prices came after the U.S. struck Iran's nuclear sites. Iran's parliament has reportedly approved a proposal to close the Strait of Hormuz, where around 20% of the world's oil and gas supply flows. It is now up to Iran's Supreme National Security Council to make the final decision on the proposal. Here at home, oil companies agreed to staggered fuel price hikes, averting what would have been a one-time big-time increase this week. That's according to the Department of Energy, after Officer in Charge Sharon Garin met with oil industry representatives to discuss the issue. The increase stemmed from rising global fuel prices amid the escalating conflicts between Israel and Iran. Garin says their dialogue reflects a shared commitment to balance economic realities with the need to protect Filipinos from price shocks. Flight tracking website Flight Radar 24 showed an empty airspace over Iran, Iraq, Syria, and Israel today. Commercial airlines around the world are implementing the safety measure after developments over the weekend. Singapore Airlines has canceled flights from Singapore to Dubai after a security assessment. Air France KLM also canceled flights to and from Dubai and Riyadh on Sunday and Monday. Airlines are also concerned about the potential spike in oil prices, as this could trigger an increase in the cost of jet fuel. Meanwhile, Israel is ramping up flights to help stranded travelers at home and abroad. 26 OFWs and one Filipino tourist have been safely brought out of Israel as the Philippine government steps up its repatriation efforts amid escalating regional tensions. The group crossed into Jordan via the King Hussein Bridge, personally assisted by Migrant Workers Secretary Hans Kakdak and Philippine Ambassador to Jordan, Wilfredo Santos. They received immediate cash aid and emergency support from the government upon arrival.
Every time may inuuwing repatriates from abroad, not just the Middle East, sinasalubong sila at minsan doon mismo sa airport, binibigyan ng cheque na it depends, 50,000 sometimes or maybe 100,000 pesos pa.
Secretary Kakdak is set to fly back to Manila with the repatriates Tuesday morning, highlighting the government's commitment to protect Filipinos overseas in times of crisis. This is part of a coordinated push by the DFA, the Migrant Workers Department, and embassies in Tel Aviv and Amman to ensure the safe return of Filipinos from active conflict zones. The agriculture sector is poised for stronger growth in the second quarter of the year. This comes as palay output is projected to reach 4.36 million metric tons, while corn production is expected to expand to 1.5 million metric tons. Rice and corn are key contributors to crop production, which makes up about 57% of the country's total agricultural output. Despite the free trade deal in effect, Philippine exports to South Korea slumped 25% to $1 billion in the first 4 months of 2025. Economists, however, see a rebound in the second half following Seoul's political transition under a new president and early signs of economic stabilization. RCBC's chief economist Michael Ricafort says the weaker Korean won and tough competition from Vietnam dragged down Philippine exports for goods like bananas. Philippine Institute for Development Studies senior research fellow John Paulo Rivera urges exporters to maximize tariff gains and target niche markets like electronics and processed food. South Korea slipped this year from 5th to 7th among the Philippines' biggest export markets. We're taking a short break. More business stories are up next. You're watching Business Brief. Philippine real estate is proving resilient amid an economic slowdown with strong demand from the business process outsourcing sector. In an interview on BNC's Business 360, David Lee Chu, CEO of Lee Chu Property Consultants, said foreign interest in BPO spaces is surging, but political instability, including the impeachment move against Vice President Sara Duterte, could shake foreign investor confidence.
I think the foreigners will be concerned, some of them. It's not an issue for the locals, definitely. We have to remind people that the Philippines is a counter-cyclical market. So as the world goes into problems, more jobs are created in the Philippines because of the BPO sector. I sit on the board, and for the last 2 years, we have seen a massive spike in interest from foreigners, from companies wanting to set up in the Philippines for the first time to do BPO.
Meantime, Lee Chu urges lawmakers to protect property rights and enforce zoning laws to keep the momentum in the real estate sector. President Bongbong Marcos inspects the newly renovated port in Marawi. The 261.5 million peso investment is designed to jumpstart economic activity in Lanao del Sur. What used to be an old fisherman's causeway now has a fish port, a single-story terminal for over 100 passengers, berthing facilities for fast craft, and a roll-on, roll-off ramp. It is part of several national-funded projects meant to rebuild the city. A 5-month conflict displaced nearly 400,000 residents over 8 years ago when the Islamic State-affiliated Maute Group resisted government forces deployed to arrest Abu Sayyaf leader Isnilon Hapilon. Also during his Marawi visit, President Marcos inspected temporary learning spaces and gave Starlink units to 5 schools. The internet kits aim to boost digital access for over 700 students. The learning centers are repurposed buildings meant to ensure continuing education of children in the area after the 2017 Marawi siege. The Office of the President also distributed school supplies to the students. San Miguel Corporation will break ground by July on a new passenger terminal at Caticlan Airport, the gateway to Boracay. The terminal will have 8 boarding bridges and can handle up to 7 million travelers annually. SMC President Ramon Ang eyes completion before 2028, according to Transportation Secretary Vince Dizon. The Boracay Airport is operated by SMC Infra subsidiary TransAir. The island destination gets over 2 million visitors annually. The shares of Manila Water surged last week on strong optimism around its East Bay treatment plant upgrade and momentum in the water sector. The stock climbed 14.2% to $39.40, sharply outperforming the broader market. Investors welcome news that the East Bay project is now 92% complete, a signal of operational gains ahead. The facility is designed to deliver 200 million liters per day from Laguna Lake, easing Metro Manila's dependence on Angat Dam and improving water security in the East Zone. The rally also comes ahead of Maynilad's planned IPO, further stoking interest in the country's water infrastructure space. For investors, it's a reminder that water utilities are quietly becoming a high-stakes play on urban growth, climate risk, and sustainable returns. Filipino drivers are going electric, and AC Mobility, backed by the Zobel de Ayala family, is leading the charge. With sleek EVs, ultra-fast chargers, and a growing national footprint, AC Mobility isn't just in the game, it's shifting the future of transport. Here's our mobility correspondent, G. Baroga, with a story.
As Filipino motorists become more eco-conscious and tech-savvy, AC Mobility, led by Bilyonaryo heir Jaime Alfonso Zobel de Ayala, is positioning itself at the forefront of the country's electric vehicle revolution.
We are introducing innovative vehicles, we are expanding infrastructure, and we are fostering the mindset that is needed to accelerate the Philippines' transition to a cleaner and more sustainable future for all of us.
AC Mobility now claims 90% share of the Philippine EV market. This dominance is fueled by its growing portfolio of brands from BYD, Kia, and Volkswagen to dealerships for Honda and Isuzu. But the company isn't just focused on vehicle sales. It's building the infrastructure to support long-term EV adoption.
We are on track to reach our ambitious goal of over 700 charging points by the end of this year, with stations already operational across the region. We have 3 locations already powered up, and we are expected to double by year end.
Among the notable developments are the country's fastest EV chargers, with 240 kilowatt and 480 kilowatt units now up in Makati, aimed at slashing charging time for busy urban motorists. A key driver of this growth is BYD Cars Philippines, whose lineup has rapidly expanded just over a year since AC Mobility entered into partnership with the Chinese EV giant. And their latest model, the BYD Sea Lion 5 DMI, is now in the country.
This is growth that reflects a keen understanding of the evolving needs of Filipino motorists, striking a balance between range, practicality, and of course, performance.
The Sea Lion 5 features BYD's hybrid tech called the Super Dual Mode Intelligent, which allows the vehicle to run over 1,400 kilometers on a full tank and full charge.
Basically, the vehicle's priorities when you start the vehicle, okay, the electric motor engages. The battery is charged by the engine as you move and as deemed necessary.
The new model also includes high-end features such as soft leather seats and a rotating touchscreen infotainment system, reinforcing BYD's appeal to the premium mass market. To mark the launch, AC Mobility is offering the Sea Lion 5 DMI at an introductory price of 1.198 million pesos, 50,000 less than its retail price. As Filipino motorists demand for a cleaner, smarter, and more connected mobility solutions, Jaime Alfonso Zubel de Ayala and AC Mobility appear poised to define the EV landscape in the Philippines, not just with cars but with a full ecosystem built for the future. For BNC Mobility, G. Baroga.
A sea of red dominates the equity markets as Philippine shares slip back to the 6,200 level. The PSE index ended lower by nearly 2% to close at 62.18, finishing the day as the worst performer in Asia. All of the sectoral indices ended in the red, with mining and oil falling the most at more than 3%. Decliners outpaced advancers 142 to 60. Total value turnover reached 6.3 billion pesos. All of the day's most active stocks ended in the red, with DigiPlus falling the most at more than 7%. Meanwhile, at the foreign exchange market, the peso is currently trading at 57.56 against the greenback, weakening from the previous close of 57.70. That's a wrap of today's Business Brief. I'm Mai Rodriguez. Join us again next week as we bring you the stories that help you plan your next big, bold moves in business, only here on the Bilyonaryo News Channel. See you then.